Good morning, ladies and gentlemen. Welcome to the show. Glad to have you guys here. Now, what I want to talk about is wealth cycles. And in this show, I want to also talk about governments. Now, monarchies ruled the world for the longest time. The monarchies were phased out. What we're looking at coming in these crises in the financial system are coming in waves. 2008 was a wave of a financial crisis, and they cured it with money creation. They didn't more or less cure it, but they covered it over. Well, we're coming in for another wave, another similar sort of a deal, and they're going to do the same thing all over again. They're going to cure it with money creation. And then we're going to go for a little while, then we're going to come into... But these waves are going to come successively closer together, and they're going to lead into this hyperinflation. The net result of all this, ultimately, is a crisis in government. Governments are they're broke. They're broke. This is why they're putting clampers on you where you can't go places without... They'll give you a piece of paper and say how much money... They actually ask you how much money you have on you if you're trying to travel anywhere. The potholes are all in the roads. They quite literally now check on people to see how much money they're carrying. They're broke. They're scrounging. They're sending police forces out to fill quotas of tickets. And so the cops are looking for every little thing you do. You didn't turn your turn signals on. Grab him. He forgot to turn his turn signals on. He didn't quite come to a complete stop at that stop sign. And they're everywhere watching you. Make one little mistake in driving, big ticket. Touch your cell phone when you're driving. Why do you think they put these new laws? Just your cell phone rings and you go to turn it off, and they spot it. Or seatbelt missing, or any little thing. Because they want more money for the government coffers. Meanwhile, they're not filling the potholes. They're not doing anything. Infrastructure's decaying. This is because they're out of money. Well, here's the thing. Next step, we lead into socialism. This is the next step for government. When the crisis in government comes, it's going to lead into socialism. Because what they're going to do is they're going to try to control the people through social programs. But this is going to increase the debt exponentially. Ultimately, in the end, there's going to be a complete failure of the system. It's going to end in a hyperinflationary depression. So, this is where we're headed. Now, a lot of people, the legacy banking system out there, they've got their money all invested in these retirement accounts and everything else. Meanwhile, the bankers, that they're a bunch of crooks. Right? They've got a scheme going with these retirement accounts. How it works is basically like this. They keep enough money in their money pool to satisfy anybody who they think most people are going to stay in the program until they get to retirement age before we're going to have to pay out. But there's the occasional guy that comes in early, wants his retirement money, even though it's going to be penalized and everything else. He's stubborn, he's going to take it. Well, they've got enough money in the pool to cover these guys. But when it comes to retirement age, really to retirement age for all these people out there who invested with them, they've hollowed all the big money out in behind the scenes. It's already gone. So, the thing is there's no use crying over that. It's already gone. They've already spent it for luxuries, the bankers. They've lived in luxury. House in the Hamptons, Lamborghini, that's your money. They've already spent it all. It's hollowed out. All the retirement stuff is all hollowed out now at this point. But they have a front on the front side of it, where if you go in, you want to see how much money you're stored for retirement. Sure, no problem at the bank. You go in, they give you a printout. Here's how much money you got, and you look at those numbers, That's just a printer. They can print anything on there, but they print the amount that you supposedly have in your account. All that money's been hollowed out. But they're not worried about that. They're not worried about that because they know by the time you hit retirement age, everything's going to be melted down anyway. And they're having their fun now on your money. So, you're not getting any interest on a regular banking or a savings account right now anyway. That's because they're a bunch of crooks. The bankers are crooks. ultimately, and your money is being eat away from inflation. So what are you going to do for retirement? Let's think about wealth cycles. And what am I doing? Now, first off, I want to say that this program that I'm going to produce right now is not financial advice, not intended to be financial advice. It just shows you what I plan on doing for my retirement, right? I don't plan on going with the legacy banking system because I think ultimately it's going to lead to you not getting your retirement. Basically, one day you're going to wake up and they're just going to basically say, well, it's not there. Sorry. Your retirement, you're not going to get your retirement. Sorry. And you'll end up with a tin can on the corner when you're really old and sick. And the cold rain coming down on your head. No thanks. Just going to show you guys what I'm planning on doing. You guys want to take this information with a grain of salt, it's fine. Okay? But it's just what I'm doing, and no way reflects on what you should be doing for your retirement. Okay? So let's look at what's going on. Let's get right into it. I've talked enough. Let's talk about these wealth cycles that I'm talking about, and we'll get started right here. Open up the charts right here, and let's get going on this. Let's take a look here. First thing I want to point out is that Trump is poised to take control of the Federal Reserve. He has sharply criticized the Federal Reserve this week, saying interest rates are hurting the economy. Trump will have the opportunity to fashion the central bank in the image he would like, as he has 4 vacancies to fill in the Board of Governors of the Federal Reserve. Right? It says President Donald Trump has multiple reasons why he should take control of the Federal Reserve. He will do so both because he can and because his broader policies argue what he should do. The president is, first off, he can. Okay, so it says here he can. He can take control of the Federal Reserve. The Board of Governors of the Federal Reserve is required to have 7 members. It has 3. 2 of the current governors were put into position by President Trump. So he's already got 2 men in there. 2 more have been nominated by the president, so that means he'll have 4 in there and are awaiting confirmation by the Senate. After those 2 are put on the Fed board, the president will then nominate 2 more to follow them. In essence, it is possible that 6 of the 7 board members will be put in place by Trump. So what does that mean? That means President Trump is taking control of the Fed. So what does President Trump want once he gets control of the Fed? Well, let's just take a look here. I think I got another article about this. Where did my other article go? Well, I'll have to talk about it. What President Trump wants, he wants quantitative easing 4. That's what he wants. And he wants them to lower interest rates back down to 0. And so we see President Trump taking control over the Fed. And we see his secondary policy is going to be to bring in quantitative easing. Quantitative easing is going to be when gold starts to shine. Now, they've controlled gold. Gold's been controlled for a long time. Let's take a look at gold manipulation here. Let's hone in on it. Gold market manipulation. The price has been manipulated downwards for a long time. Our gold price is manipulated. It says many gold investors believe that the market for gold is systematically manipulated. There are many variations of this theory. Well, actually, it's not a theory. I'm sorry, it's not a theory. It's real. Precious metals are under the thumb of central bankers, while others blame big banks, and they use their derivatives or naked shorts and high-frequency trading for the declines in the price of gold. There's also worries about the discrepancy between paper gold and physical gold. The fairness in London trading, decline in inventories at the COMEX, and leasing of gold by central banks. See, so what they're doing is they're creating a bear market within the middle of this enormously big bull market. So gold is actually still in a bull market. Look at this chart. Look closely at this gold chart going all the way back to 1968. Let's go hone the charts in and take a good look at it. And what we see here is, if you look at this market, you see a couple big mountains in price, but then downturns afterwards. But if you look at the overall, from the very start to the very finish, you see an upward trend in gold from like $20 all the way up to like where it is now, like 1,300. Okay, so you see a steady upward trend. So it's a long bull market, but within that bull market, we've had a couple spikes in price and fall-offs. But you know what's similar here? If you take a look at Bitcoin charting. Let's take a look at the Bitcoin chart here just for a minute. And you know what we see is we see spikes up in price in Bitcoin and then fall off, similar to gold. But what else do we see here with Bitcoin? Well, Bitcoin is starting to act almost like a leading indicator for gold. And Bitcoin goes through these periods where the price shoots upwards to the heavens and then falls off sharply. Well, it's done this like 8 or 9 times since the history of 2009 until Bitcoin until now. It's done these massive price increases and then fall-offs. Each subsequent price increase and fall-off is the price remains higher than it was before it previously started. Gold's doing the same thing. This means that Bitcoin has been in a bull market, just like gold has been in a bull market for all these years, going back to 1968 and earlier. It's been in a bull market. Bitcoin has been in a similar type of a bull market ever since 2009 when it was created. Except Bitcoin's bull market is more compressed than gold. Gold is looking out over a much longer period of time, where Bitcoin's doing all of this much faster, much more compressed. So, getting down to the nitty-gritty of what I think is actually happening with these wealth cycles. My personal opinion is that Bitcoin is going to take off first before gold. In fact, I think the takeoff is getting primed already. I'm not going to say we're in it yet, but I think it's getting primed. So I think Bitcoin is going to take off before gold. And I think we're going to see a bare minimum of 4 times. Now, that's my opinion from where it is right now, 5,000. I think it's going to, at the very least, break its old high. So, count that as number 1 in the wealth cycle. Okay? So, gold, I think they're going to be able to continue with the suppression for a little bit longer, carrying this suppression on until, at the very least, until quantitative easing gets started, which might be a number of months away before President Trump can get everything arranged within the Fed and they finally get to a point where they actually approve quantitative easing 4. It could be 6 months from now. But I think Bitcoin's already going to go into this bull market ahead of time. So count Bitcoin as number 1, the first mover in probably in this wealth cycle. Basically, what I think is going to happen is, at a certain point when quantitative easing comes, I think gold's going to start to take off. But I think at that point in time, Bitcoin is already going to have gone through this next raise in price up to the heavens. Who knows? Could be anywhere from $20,000 to $100,000 in price. And it's going to be going into its next bubble popping. So Bitcoin will be in the period where it's really high and the bubble's beginning to pop. This is the way I see it. This is not financial advice, but this is the way I see it. Bitcoin will have went through its next bubble, be massively high in price, and be falling in price. In other words, the bubble popping. While gold is just starting to take off and run. So gold's number 2 in the wealth cycle. It's the second one. It starts to take off. And gold will start to take off in price, and it's going to be going massively high from what it is now in price. At the same time all of this is happening, now, the world is not static. While all of this is going on, other things are happening. So what else is happening? Let's take a look at the housing market. Now see, the housing market right now is in a bubble. Worldwide. So what's happening is there's trouble ahead in the global system for the housing market. But this is going to take a little while. I was looking at charts yesterday, and there's a very direct correlation between the Fed raising interest rates and then them stopping the interest rate hikes. What happens is then you get a plateau. We're in that plateau right now. They've stopped interest rate hikes. There's a little plateau for a little while, and then what happens, then interest rates start to drop. And when that happens, that's when the housing bubbles burst. So what we're looking at right now is we're looking at an imminent housing bubble burst that's probably going to happen. It's probably going to start probably within the next 6 months. And housing prices are going to be falling. So what you're going to actually have here is you're going to have Bitcoin falling down, back down from this next bubble that it's going to go into. Could go up as high as $100,000. Bitcoin's going to be falling back down sharply. At the same time, gold's going to be rising like a phoenix. But at the same time, the housing industry, the house prices are going to be falling. So you're going to be looking at a market where you're seeing gold prices rising by the day and house prices, the bottom dropping out of house prices. So that's number 3, is the house market. The real estate market's number 3. So we got 1, 2, 3, bang, 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 all happening subsequently in line. So, what happens if a guy decides to ride the Bitcoin wave up, right? He rides it up, and gets near the top, he sells out and trades for gold. Gold's still down near the bottom, but just getting ready to take off. So then, now he's got gold. He had Bitcoin, now he's got gold, real gold, right? And he's sitting there and he's watching the housing market, watching house prices decline daily while he's got his handful of gold. Right? Well, gold's going to do the same thing. It's going to rise up into a massive bubble, just like Bitcoin. So when gold gets up to its peak, you're going to find that the housing prices have declined down to their bottom. House prices will be sitting down on dead bottom then at that point. The house bubble will have burst. Everybody will be crying, oh, my house isn't worth anything. The banks will be in trouble because real estate prices have fell down to nothing. And if you think the bank's got problems now with your retirement accounts, just wait until the real estate bubble bursts. Where are they going to get the money? So then what we're looking at is gold prices rising like a phoenix, house prices falling like a stone, right? But gold will only go so high, it'll go into a bubble. Then the bubble's getting ready to pop. If you ride that gold bubble all the way to the top, and house prices by that time will be just about down on the dead bottom, then you buy into real estate with the gold. At that point. Right? Now, when real estate's down near the bottom, what are we going to see? We're going to see it start to climb again. You see what I mean? It's all got to do with the timing, guys. And the timing doesn't have to be exact. I mean, you might miss the top. You might be able to sell on the dead cat bounce. Because that's the way markets work. They always end up having a dead cat bounce in the end. So if you miss the top, you can always take advantage of the dead cat bounce and sell out. But the other commodity, the other thing, like real estate then, would be at the very bottom. You're getting a good value there. And then you ride it up. And these are these wealth cycles. You're going to have a period of months, buying period. You always get a chance to buy in. The problem is people keep themselves poor. You know? Rich people, they always buy something that's going to make them money. Poor people buy things just for pleasure, like they buy things that like it's not going to make them any money. I'll tell you the difference between a rich person and a poor person. A poor person might go to their local bar, and they've saved up all their life. They've accumulated a nest egg, say, or something, and they might go to their local bar and they might sit down at the bar and have a drink and stuff in the evening, and then all of a sudden one day they're on their way home from work and they see the bar's up for sale because real estate prices have fell. So they'll go into the bar, and they'll say, I want to buy this bar, Now, say they do buy the bar because they wanted the bar. Well, they never looked over the paperwork of the bar to see if the business was actually a business that made money. They overlooked that part because they wanted the bar really bad. Well, the first thing they find out, they start running the bar. They decide to do that with their retirement money. They start running the bar, and they find out it's a very non-profitable business. It's losing money, and it's costing them money to maintain it. They got no customers or whatever. They bought it because they wanted it, and they pictured in their mind how they were going to make a lot of money from it and everything else, and how they were going to be the bar owner. Oh, I went to this bar for years, and now I'm the owner of it, and But in the end, it's a losing proposition, and in the end, they end up selling it for less money than they paid for it. Maybe 2/3 the money that they paid for it. A rich person doesn't work that way. A rich person will walk into the bar, and before they bought it, they'd want to look through all the paperwork for the last 5 years and make sure that the bar was a money-making proposition. Okay? Rich people also follow these wealth cycles. They don't buy when a market's going into a bubble and into a peak. Poor people, they want to get rich. They're in the store every weekend. Grocery store, they might be going through the checkout at the grocery store and they buy 5 or 6 lottery tickets. They want to get rich and they want to get rich now. You never get rich from lottery tickets. You can buy them until you're blue in the face. When poor people buy into the markets, they buy in when the market's near the peak and it's really hot. You got to start thinking differently. You got to change the way of thinking. You got to change your way of thinking. And you got to start buying things when nobody else is buying them. When everybody else doesn't like it and everybody's saying, oh, I don't want nothing to do with that. That's the time you want to be accumulating. When it's down near the bottom. When you want to be selling is when everybody else wants it. When it's a hot commodity and it's up high in price and everybody else wants it and everybody else is hanging on to it and everybody else is buying, that's when you want to be selling it off. Okay, so let's take a look at these markets. And when you think about one of the things that nobody wants gold right now, and this is what it says. It says, look for gold to shine. You can see this coming. You can see this coming. Trump's taking control of the Fed. And he wants to lower the rates. This is going to lead to weakening of the dollar. Tremendous weakening of the dollar is going to lead to a strengthening of gold. But when's all this going to happen? Well, we got a little lag period here. This could take up to a year to really get into effect where we see quantitative easing 4. I mean, I have to face it. It could take up to another year before quantitative easing 4 comes out. And in that meantime period, what we're going to see is we're going to see them continue to suppress the price of gold and silver. In fact, these bankers that are suppressing the price of gold and silver might work all the harder to knock it down even lower than it is now, just before quantitative easing 4 comes out. Meanwhile, we see Bitcoin drifting upwards in price. Looks like Bitcoin is starting to, if we look at the end of this chart here, we see nothing but green candles, mostly green candles. Bitcoin looks like it's poised to go. I think there's an entire possibility, and this is my opinion only, that Bitcoin actually could take off first. And Bitcoin's already went through its low periods. It's already went down, way down, massively low, all the way down to almost, low 3,000s. Okay? So, now what about the people who say, I'll never ever buy Bitcoin. I'm a gold bug and I don't like Bitcoin. Bitcoin's for the birds. What's going to happen to those people? They're going to make it remarkably well because of the fact that gold is, of what gold is. Gold's going to go into this bull market, but they're going to have to wait a little while until quantitative easing 4 gets here. And they might miss out on an opportunity of doubling, tripling, quadrupling their money in cryptocurrencies. But that's okay. That's perfectly okay. In the end, they're going to make out fine, especially if they wait until gold gets to its highest price, and then they drop out and get into real estate. For the gold bugs and silver bugs out there, don't let silver go all the way up to a high prices and gold go up to really, really high prices. You see it fall off and go into a dead cat bounce, and then you still hold it. And you got no exit strategy. Because what you'll do is you'll ride that bull market all the way up to the top, and you'll ride it all the way back down to the bottom, and you'll still be hanging on to your gold. You got to have an exit strategy, guys. And I'm saying here the exit strategy is probably going to be into real estate, because when gold hits its peak, I think the real estate's going to be at rock bottom. I don't think the exit strategy is going to be into the dollar. Because I think you're going to be buying into something that's going to die on you ultimately in the end. Because when Bitcoin goes through this next cycle where it goes up to a massive peak, it's going to fall back down again. But then it's going to poise itself for another even more massively. If this is going to continue to keep doing this, it's been doing this ever since 2009 until now. There's no reason to think it's going to stop. Ultimately, I think in the end, it's going to start to take over the world's financial systems. Bitcoin and its other brothers, the cryptocurrencies. Ultimately, in the end, I think they're going to take over everything. But we're looking out a few years, you know. It's going to take a while. It's not going to be something that's going to happen overnight. But if you take a look at Bitcoin charting all the way back to its start, where it is now, it's massive. Because this is a massive new breakthrough in the technology of money, simply put. But you can take advantage of these wealth cycles, and in the end you'll end up having real estate that you'd no way be able to afford if you didn't take advantage of these wealth cycles. In other words, you'll have moved up in position. Whereas, and I think real estate's going to be the ultimate landing place for all of this. So you're going to have to go through periods of owning other asset classes, but ultimately real estate is high right now. Hold your powder on real estate. Don't buy real estate right now when it's in a bubble. Hold your power. And then when you do finally sell your gold off, when gold is at its peak and you buy your real estate, think first. Houses, especially vacant houses, are more of a pain. They're a pain. That's what they are. They're a pain to you. Because, especially if they're vacant and not rented out or anything like that, they're a pain. Because the property taxes are high on houses. And also, they're very susceptible to vandalism, to fire. They're susceptible to repairs. They're constantly in a state of decay. There's always something going wrong with them. The paint's peeling off of them, or it's just an endless headaches with houses, unless you're going to live in it. But you don't face any of these problems with land, especially stuff like farmland. With farmland, the taxes are relatively low compared to houses, and there's little or no maintenance. Okay? Big pluses. Now, another thing where you can make out good with is things like duplexes and rental units you can buy with your gold. And if you get good renters in a rental unit, the dividends that'll pay you back is worth the maintenance costs. if you've got good renters and you've got all your units filled with people renting in them. And believe me, coming after this crisis and stuff, there's going to be a very large call for rentals and rental units after this crisis is over. So a lot to think about. Listen, thank you guys for listening to my show, and we'll catch you guys in the next show. Bye-bye for now.